Mr. Ghosh, thank you very much for joining us here on NDTV Profit. It's a pleasure to have you on the show today. Sir, can you talk to us a little bit firstly about the IPO and then tell us what your company really does?
Okay, as far as the IPO is concerned, we wanted to raise about 1,200 crores. This is primarily to meet the RBI requirements for a small finance bank in terms of domestic ownership. Our initial ownership, foreign ownership, was about 90%, and we've already completed a pre-IPO of around 290, which has reduced it to 77%. And this has to come down to below 49% to meet the RBI requirements. So post-IPO, we expect this to come down to around 44 to 45%. That is one of the main objectives. And there is around 600 crores of primary, which would primarily go into the investments which we have to make in terms of conversion to a small finance bank, in terms of our investments in technology, in terms of infrastructure, in channels, etc., plus also meet our business requirements for the next 4 or 5 years.
Okay. So in total for your business...
the objective of the...
Right. So in total, how much are you raising to meet the, for your growth of the bank license that you have? How much will be going into those operations?
It will be about 650 crores.
Okay. How soon can we expect the operations to start? How soon?
That's the primary portion of the... The RBI gives us, has given us time till April 2017, and we expect to start our operations after completing all the preparatory work by the first quarter of 2017.
Okay. Could you talk to us about, this transition phase that you are likely to see in this? A little bit about the financials of the company. What is the current focus area? What kind of credit growth, revenues have you seen till now?
Well, the credit growth still continues to be strong. We are growing at around 30 to 40%. And that will continue. It will moderate to a certain extent. But in the first, what we are looking for in this transition period is primarily we have to invest a fair amount in new technology systems. We have one of the most advanced technology already for a microfinance institution. But we need to put in a core banking system for the liabilities, remittances, treasury, etc., and then tie up the entire IT infrastructure for the core banking. So that would be one of the major areas of change which will take place. Along with that, since we've not been in the liability or deposit-taking business, we've been primarily on the loan-giving business. We have to build up a completely a different team in terms of raising liabilities, change our culture to that extent from loan giving, but to a comprehensive set of financial services which will include deposit taking, remittances, third-party products, etc. So become truly a multi-product company, So there will be a fair amount of investment in terms of people. The third area is also in terms of our infrastructure. So there will be a fair amount of investment. We have 470 branches. We will be converting these branches into small finance bank branches in a phased manner. Initially, we'd probably convert about 40% of them, and then by April 2017. And then over a few years, we'll convert all of them. And that would require a fair amount of investment in the branch premises and physical infrastructure, as most of our branches today lie on the second, third floor of buildings, will have to be moved down to the ground floor, etc. So there's a fair amount of investment there. Finally, we would also have to supplement our branch infrastructure in terms of reaching out to customers through additional channels. That is through the BC network and also through things like ATM, phone banking, internet, etc. So those also would require a fair amount of investment.
Right. Also, as we understand, when this transition will be taking place and all these investments are going to be made, is that likely to have some sort of an impact on your net interest margin, or that's going to be offsetted because of the lower borrowing cost regime that we are seeing right now?
Yeah, I think, currently we do most of our funding through term loans from banks, where our cost is around 12%. So as we move into become a bank, there will be a reduction in our borrowing costs because the interbank rates are much lower, etc. So there will be an offsetting, reduction of cost there. But initially, in the first few years, there will be, as I indicated, a fair amount of investment in technology, infrastructure, people, channels. So there will be a certain amount of impact which will be there on our costs. I can't define it completely for you because of the restrictions we have today, but there definitely will be an impact which is going to be temporary in nature, and hopefully within 2 years after we start our operations, we'll be back to managing our costs at the present levels.
Right. Could you also talk to us a little bit about the asset quality? What is it that you have right now, and what is your key focus in terms of credit targets?
So our, we have outstanding asset quality. Our PAR rates, which is portfolio at risk over 30 days, is only 0.15%. So asset quality wise, we have an outstanding portfolio quality today, and it has been like that for a number of years. So it's been consistent. That goes along with the kind of asset quality which is there for group lending and microfinance. But as we move, in future we plan to move much more into individual lending, mainly for micro entrepreneurs. And as you know, the government has programs like the Mudra program for micro SME. We would work very closely with that kind of a program. In that, we expect our, portfolio quality to slightly deteriorate from what is there for the group lending, but it will not be a significant change, but we have already provided for it, in our plans, so that, we are able to absorb the higher credit costs which go with individual lending for micro SMEs.
Right. Can you also tell us a little bit about the ticket size which is there currently, and how is it really going to change once you convert yourself into a small finance bank?
Well, currently the average loan size in the group lending is about 23,000. And as increasing, in the individual loan sizes, the unsecured can be anywhere between 50,000 to 2 lakhs. And we would also be doing secured business, which can go up to 10 to 12 lakhs. So that the average ticket size is expected to grow fairly substantially once our mix between group lending and individual lending changes, over the years.
Also, Mr. Ghosh, at this point in time, there is a lot of focus on the MSMEs, particularly because the government is really focusing on this sector a lot. There is a lot of competition on the ground for this group lending and for individual lending as well. There are informal channels and there are certain formal channels coming up like yours as well. How do you really how would you be positioning yourself? Is there going to be a different strategy when we talk about your company? Because there is a lot of competition now building up.
Yeah, I mean, in terms of, the informal channels have always been there, but it's a question of our replacing the informal channels with the formalized channels with the support of programs like Mudra, which the government has. And the market size, frankly, is so large that I think there is room for everyone, and I don't think, to me, it looks more like a wide open space rather than a very competitive market right now. This is largely, people who borrow between 2 lakhs to 10 lakhs for their businesses is largely served by the unorganized sector. And, it is wide open space where we can expand our business significantly.
All right, Mr. Ghosh, we'll leave it there. Appreciate you joining us here on NDTV Profit and sharing with us the outlook going forward as far as your company is concerned.